Hello, friends, and welcome back to the Money World. After a very long time, I have not been able to record a video on the stock markets for quite a while. And another factor is that in this is that the levels the stock market had reached were very high, and some of the valuations were so high that it was really not sustainable, in my opinion. Now that because of the Ukraine conditions, the stock market has reacted and it has the index has come down drastically. I think there are several opportunities that have been created. And today I will take a look at one such stock called Astra Microwave Products. So it is in the space of radar technology and mainly catering to government of India organizations like DRDO and the space organizations. The usual disclaimer: investments are subject to market risk and fluctuations. The MoneyWorld channel is for information purposes only. This channel, forum, or its contributors do not assume any responsibility for investment decisions made as a result of their recommendations. Before I go to the Astra Microwave stock, I will take a look at my past reviews, which I've made in the last couple of years. So the first review was on April 12th, 2020, so almost 2 years ago. And COVID had just started, and the stock market had fallen quite drastically at that time. So the share price on that day was 548, and the share price on 12th March 2022 is 1381. Of course, we have to factor the increase in the index also during those 2 years. The second stock which we talked about was IDFC First Bank, and that was on September 18, 2020, when the share price was 31. Currently, it is at 42, but it had briefly reached a high of 60 before falling. Now, this bank has exposure to Vodafone and other so-called accounts which were likely to go bad. But now it has completed a phase of restructuring. It first merged with First Capital, and then now first it transformed from an IDFC financial institution to a bank. Then it merged with First Capital. And if you analyze the journey during the past 2 years, its ratios are improving significantly. So I will take a separate video on that. But what we can say, and if you listen to the videos of Vaidyanathan, Mr. Vaidyanathan, its CEO, then it is apparent that the major restructuring phase of the bank is over, and whatever benefits are to accrue to the investors and to the bank would follow in the coming days. So I think it's a very good investment still at 42, and the best days of the bank are yet to come. Some people are comparing it with HDFC Bank, but of course, HDFC Bank is a very mature bank with a history, very, very long history. So that comparison may not be justified at this stage. But the way IDFC has transformed itself into a retail bank, and the way it has been able to grab a share of the CASA deposits, it's very impressive. The way it has restructured its assets, that is, its loan portfolio is also very good. Its NPAs are under control. So I think the most exciting phase of IDFC First Bank is still yet to come. So at 42, you can still, I would still consider buying this share. Dixon Technologies was reviewed on April 16, 2021, little less than a year ago at 3737, and it briefly touched 5500 before falling to 4163. Now Dixon's problem is it is in a very low margin business because it's a contract manufacturer, so most of the margins are retained by Samsung and other OEMs that it works for. So since it has a very high PE, I'm not really sure whether there is still any major upside in this stock, so I would let it go. So coming to Astra Micro World, the latest quarterly results are available here, and the earnings presentation, which I have referred while making this presentation, is also available at this website. So please visit that. We will also be taking a look at it uh, during this video. What is the product range and of Astra Microwave? It manufactures radio frequency applications, which have applications in defense, space, telecom, meteorology. Majority of the customers of Astra would be in the government sector, like DRDO and all these government organizations, which are carrying on research in space technology, in defense, radars, etc. Uh, it is one of the few defense stocks in the private sector, and the government of India has identified defense as a major focus area for Make in India. India's defense expenditure is very high and consists of very high-end products or very high-end arms and ammunitions. And if you could manufacture a small portion of it in India, I think there would be a lot of value addition for the country as a whole, and the companies who are engaged in that uh, definitely they would have high potential in the coming days. Having said that, we'll come to the risk factors in the next slide. Uh, uh, so. Uh, yeah, I'll come to that in a minute. Uh, Now, there are several radar programs and satellite programs launched by the government of India, and these companies actually participate right from the research stage to the delivery of the product. Not only that, almost 50% of the sales of Astra comes from exports, and that kind of proves their capability, since they're able to export as well to an Israeli company majorly. So. The falling rupee now, the rupee has fallen up to 77 recently, and that should help, improving the margins of this company. As per their presentation, their exports have very lower margins than domestic business. So their aim is to shift the focus on domestic business rather than exports. And recently, they have set up JV with Rafael. Rafael, as we know, is supplying jets to India, and as part of those contracts, they need to manufacture a certain percentage of the value in India. And one such JV with Rafael is with Astra. The bad thing is that if you visit their website, business has not really started in full earnest. So we are yet to see the results of this JV with Rafael. Now, coming to the risk factors, significant volume of business from government organizations. And well, we all know how PSUs work, and the risk associated with efficiencies, with getting timely payment. So that could be a major risk factor for Astra. Then for exports, their reliance is on a single customer, ELTA Systems. Uh, Very similar to other PSUs involved in defense. If you take a look at Hindustan Aeronautics, its inventory is almost a year of its sales. So very high investment in working capital required. What I think is that the product development itself takes a lot of time. Then if you start assembling an aircraft, there are hundreds and thousands of parts to be procured. So the whole inventory that is stuck up in the production process is very high, almost a year. So similar to that, Astra's inventory is also almost half a year, and roughly the same amount in receivables. That means it has the time it takes to get the money from DRDO or similar organizations is very high. So if you compare that with its capex, capital expenditure, capex is quite low. The investment working capital is very high. With this, we will go to the actual presentation in a minute. Uh, so let's take a look at the presentation of Astra Microwave Products, their investor presentation as of Q3 fiscal year 22, that is December 2021. And while you can go through this in detail, I will focus on the salient features. This is a company with more than 30 years of domain expertise and promoted by a team of distinguished scientists from DRDO. and they have five facilities in Hyderabad and Bangalore. Now, if you look at the financial part of it, their order book is around 1702 crores, which is like 3x of revenue of fiscal year 21, three times the revenue. So a very healthy order book, and that puts a lot of confidence into the future prospects of the company. This slide gives a brief overview of their progress from manufacturing components to now being able to build entire systems of satcom systems or surveillance radars, etc. This is their team of expert directors who lead this company. And see, if we look at the way forward, and they have given a high-level picture of how the Indian defense industry is shaping up and what opportunities it offers for companies like Astra Microwave. And I personally feel that we are at the very nascent stage of development of the Indian defense industry. So indigenization has just started, and uh, this could be like a Y2K moment for the defense industry. These companies have a lot of steam in them to kind of progress and piggyback on the government program and then develop their own capabilities. But of course, having said that, this requires a lot of high technology. We are competing with the best in the world, and while Indian engineers are not behind anybody else, as the software sector has proven that uh, the competition is already out there. So the competition is already very high. Now the make and innovation policies they have given. Here, if you look at the distribution of revenue, it's roughly 50-50 between exports and domestic. And as per the company, the margins under exports are lower, so they aim to move to domestic, provided DRDO and their space programs and the radar programs are able to, you know, progress as per the agreed timelines. Financial highlights. We saw the revenues. There is a healthy growth in the revenues, corresponding growth in the profits. Uh, some sort of COVID impact was there in the previous year, but now it has more or less gone away. So we should be seeing healthy growth going ahead. If you look at the EPS for the 9 months, roughly around 2.85. So even if we assume an EPS of around 4 or 5, at the current price, the P is slightly on the higher side. Now, if you look at the balance sheet, what I was trying to say is that you look at their inventories as of March 21. The inventories are 291 crores and the receivables are 254 crores. As against that, the sales itself are 589, so roughly 600 crores. So you see here that out of 600 crores, roughly 300 crores inventory. So they are carrying roughly 6 months of inventory and then roughly 5 to 6 months of receivables. So that is the bane of the defense industry, that very high investment is required in inventories and receivables. And imagine if some of these programs were to get scrapped or modified, then what happens to these inventories? Are they able to retrofit it to the new program, or it has to be just scrapped? So those are some of the concerns we feel while investing in this company, together with the high PE ratio. So as against a yearly EPS of, let's say, 5, the current market price of around 200. So still it is 40 times. So we are assuming a lot of growth to happen in this company if we were to justify this P. I would say that I have invested in this company in small quantities, and the next couple of years would actually define whether the growth story that they are promising is going to happen or not. So with that, I would like to end my video. Do let me know your comments and feedback. Thank you very much.